Hi, good afternoon to everyone. Very nice to be here. Um, I don't know how a Mexican bank ended up in this regional. I think I owe it to Brian a couple of years ago when he started getting involved in this. But I'm very glad to be here. I'm very glad to sharing the space with these experts that are coming from different approaches. No. Um, and I was joking with I don't know how we ended up being here, but at the end of the day, um, perhaps just to give you a brief explanation about that, Banorte Banorte is many of you know us, but many of you don't. We are the second largest bank in Mexico, no? And even though it may seem a little far away, what are we doing in a venue like this and a conference like this, um, let's take what we call the G6, which is the six largest banks in Mexico, where we have that have approximately 75% of the banking market share in Mexico, are five foreign banks, five global banks, and Banorte. So we're in our way pretty much a regional bank, and some of the pains that you have, we share them with you. So I'm really glad to be here. No. Um, the idea of this panel is precisely to talk about exporting outside the USA and what are some of the pain points, the main pain points and main challenges that we face on that. I'm very glad to have here this combination of panelists. I was jealous with Alan having an importer and an exporter at the same time in his panel. I think it was a very interesting non-bank approach and conducted by someone that knows his clients and has been knowing his clients for many time. So the idea is also to here take advantage of having um, one of the largest, if not the largest, trading and soft commodity house of the world, no, the USDA, a commercial bank with someone as Bill that has have international experience many years in not only in the States but in many other places, and then this like, Mexican bank, but that I don't know how, but here we are. No, so the first of all, I want to introduce, and I'm going to give in the same order, Gabe Amundson. Gabe Amundson is director in Cargill's Trade and Capital Markets, and his primary focus is working with partners interested in supporting Cargill's trade finance, including banks, non-banks, investors, and export credit agencies. Thanks, Gabe. We have Rita Carleton. I'm very glad that you also acceded to participate, Rita. Rita is the director of Risk and Asset Management branch of the USDA Foreign Agricultural Services. She has been the director of that branch since 2015. No? And I would probably this is not the official, but I would say she's the mom of the programs that most of the banks utilize on a daily basis for the support of U.S. agricultural exports abroad, both here in the States and foreign banks. And Bill Glassford is the senior vice president of science Bancorporation. Bill is based in Seattle, so I believe it took me less time than you to get here, probably. But Bill has had a long time experience in Asia and a long term experience with Science Bancorporation, dealing with precisely what Mark was saying a while ago, being a main bank for a Main Street bank for the Main Street clients. You know, and this is I think the main point of the regional banking conference. It's a different approach, is and I think it's something that we're all here to talk about. So I don't know. First, I wanted to explore with you, Rita. The idea is if you can share with us some of the relevant figures and some of the main bullet points of the program that you have, relevant figures about the U.S. agricultural exports into the world, and how important from your point of view, is financing for U.S. agricultural exporters? And how can federal government agencies, we just heard from SBA and US Exim, offer programs to assist exporters with the financing needs?
Well, thank you. Thank you, everybody. I'm glad to be here. We appreciate the invitation today. U.S. agricultural exports is an important, a very important part of the overall U.S. economy. I probably don't have to tell this to and to this audience. And it was surprisingly resilient during the pandemic. So in 2021, for example, we had 173 billion in U.S. agricultural exports. Last fiscal year, we had 196 billion. And this year, it's going to be, the estimates are a little bit uncertain given the current environment with Russia, Ukraine, and supply chain issues, but the latest estimate is around 194 billion. And our program, which is called GSM 102, or the Export Credit Guarantee Program, by comparison is actually a small share of that. The program provides a minimum by statute of 5.5 billion in guarantees every fiscal year. And the program tends to be countercyclical. It is used more when we see diminishing liquidity in the market, or it is used, for example, very heavily in the 2008-2009 financial crisis, when we saw not only liquidity being pulled back, but also what we heard discussed today, that many banks began to, I think we've heard, decost or de-risk. And so they pulled their lines, from many of the foreign financial institutions that we used to do business with under the program. And so we were looking, frankly, at a small subset of U.S. banks. Also, we're pulling, working with clients, deciding how to allocate their know your customer costs. And so our program became one that they turned to, one because we have made over the years after this a concerted effort to expand the U.S. Regional bank participation. And if you were to look at our list, probably more than half are regional banks. And that really was something that was driven from within the organization, to add these institutions. So with that, we had the ability to undertake more activity, because our U.S. exporters like Cargill and others had an opportunity to approach more U.S. financial institutions to undertake those trades. I'll stop there.
Thank you, Rita. Thanks so much. And now that you touched base and you mentioned Cargill, and I know this is not, but how can you make sure that, or how can regional banks, both in the States and abroad, can help that these benefits and these programs and these mitigating structures end up supporting real trade flows and not there's a lot of federal budget being invested in that. How can you suggest that these benefits are passed on to the clients and increase the trade flows that are happening? This is more for you, Rita. I don't know if that's something that you have seen, or you believe it stays. It's a program that does not benefit the export you said it's growing you said from 190 billion to 194, 95 billion this year. Is this expected growth that you had in mind? How can regional banks take advantage of these programs that you already have in place in a more efficient way?
I think that the regional banks, I think the advantage, and Bill and maybe others who are participating might be able to weigh in, is that we're a tool for the bank to have in their toolkit. We tend to be, as I said, a counter-cyclical program. So there might be times when that program may not be useful to your client. But if you have a client who's already exporting overseas and there's an opportunity to expand into a particular market, our program is a risk mitigation program. And that might be the opportunity for you to show the client, hey, this is a tool that might be useful for you. And from the bank's perspective, we think that the capital charge is less because we provide a guarantee of 98%, and the U.S. bank is taking 2% of the risk. I do want to step back and say that we're making an assumption here. The payment guarantee, which is a guarantee for non-payment by the foreign financial institution, is actually issued to the U.S. exporter, like Cargill, but typically they're going to assign it to the U.S. financial institution. And so you are the one holding the payment guarantee. You are able to develop correspondent banking relationships, perhaps, because you will be in a position to enter into dollar financing for that foreign bank who is opening up the letter of credit in favor of the exporter. And so we see it as both a tool to offer your clients, one that might help your balance sheet, and also one that might help you develop relationships with other correspondent banks.
Excellent. Thanks, Rita. And here, coming to Gabe, and it came up during the previous discussion in the panel with the exporter and the importer. No, clearly, most of the cases, exporters want to get paid as quickly and safe as possible, whereas their clients abroad, they usually try to see how they can defer payment until they receive and resolve the good. No, how much would you consider, Gabe, that making a sale abroad depends on the ability of U.S. exporters? And now we're talking about Cargill, but also SMEs and mid-sized companies of U.S. exporters to offer attractive payment terms to their buyers abroad. No, what would you say are some of the main issues that they face when doing this? Someone was talking about foreign competition in other markets where there are some other sellers are very aggressive on that respect. And what would you say is Cargill's value proposition to the regional banking group that you're talking here?
Sure. Yeah. Thank you. Let's see. So first part, the financing aspect of a sale is crucial for Cargill, and it might not always look the same way, right? It might be, in one case, just simply extending payment terms. In another case, it might be a pre-export financing, or maybe we're trying to secure a long-term supply agreements with say a sugar mill in Brazil, right? And what we've also found as a business is sometimes it's just saying, okay, well, we have this physical movement of goods that's going from point A to point B. How do we add some financial value to that product that's already moving across the globe, and in the end, drive that back into our commercial business? So the group I'm part of, the Trade and Capital Markets, was actually formed within Cargill with that idea in mind. And that was around 30 years ago. So the idea was we need to be able to offer financial solutions to our customers, and we know there's value in this physical movement of goods. going around the world. So how do we extract that value? So today we're about 300 people globally, and that is our focus. And we, the crucial part of us being able to do that as a company is to work with our banking partners and the ECAs that support our business. So without a doubt, being able to offer that financing makes our product more competitive on the global markets. Cargill being a major exporter, then we do have the advantage of being able to get a little broader on the types of products we can look at, the types of solutions, and we do have our own balance sheet that we can carry, certain risks. The main risks we're looking to mitigate, obviously, our credit risk, documentary risk, especially when you're looking at a letter of credit, and then convertibility risk when we look at other countries. So that's what we're focused on. And really the key is for Cargill, we are still a privately owned company, and we still have balance sheet constraints like any other company. So we need partners that have appetite for the type of risks we're putting together, that are willing to take the risk that we're generating and help us get the balance sheet relief.
And let me ask you something. With the current situation now and the rates going up, and I used to have a boss that used to say, someone was talking about fintechs and some of the fintechs, and there are some great fintechs, but there's also a lot of smoke in the room, as someone was saying. So I used to have a boss that said, the excess of liquidity is the marijuana of the financiers. No, when there's an excess of liquidity, we do crazy things. No? and I want to ask you, with the rates now going up, is this going to change the environment for someone like Cargill to do business abroad, to be able to buy and sell and trade in the global world?
It will certainly make for changes, right? Or require changes on our side. We do have the benefits of having a robust group of banks that support us globally, and different banks support us in different ways. So thankfully, I work with a number of people in this room here today. We might not support Cargill the same way, Money Center Bank would. Still just as valuable to Cargill and our overall need. So certainly the financing aspect of our commodity movements has gotten more challenging, and we've seen balance sheet tightening, from partner banks, understandably, and so part of the way we look to mitigate that is maybe activity through ECAs that we weren't using when there was more liquidity in the market. So our goal will look to hold some of that on the balance sheet as well. And then I'm always hopeful and looking to expand our banking relationship. So to me, that's the key, is finding more people that have appetite for the type of risk we're generating.
Thanks so much, Gabe. Bill, now going back to you, and again, I hope I will have to pay rights, but what you said, it's Main Street banks talking to Main Street companies. It's something that I'm going to have to think about. The Main Street in Mexico, where Avenida Reforma guys talking to, it's really, but I think that the first natural step for U.S. exporters that are seeking for support to their sales abroad is to approach their local regional banks, that they already use for domestic purposes. They know them. It's going to save them a lot of time and money. It's because of the relationship, the business relationship, the familiarity that already exists is going to help us. And as Luis Noriega of US Exim was saying, the trade function, knowing your clients and understanding profoundly the nature of its commercial business, it's something that only the regional bank that knows this client for many years really has. So in that respect, from a commercial or from a regional bank perspective, how can a regional bank expand its scope of business and support its client in their international needs? What would you suggest there, Bill?
Good, thank you. I think we just heard Gabe say that regional banks are the marijuana of the banking system. Is that right?
They're always more fun to hang out with.
I've got several points on that. A couple points that were made this morning when we heard from the commercial partners up here on the export and import side. There was two important points that I took away. One, we talked about protectionism, and I think that trade is here to stay. I don't think we can put the genie back in the bottle, despite Congress, despite wars and everything else. So it's an important part of the economy. It's an important part of our own well-being as individuals. The second point I took away, and you just mentioned it, was the importance of regional banks. And I think if I raised, if we looked at this room right now and we looked at the expertise in this room, many of us have been with money center banks, we're with regional banks, but we have the money center banks and are so siloed right now, and the diversification of experience in regional banks across different parts of what we call international banking is so broad. Whether it be international private banking or international trade finance or international correspondent banking and on and on and on. So we are a broad group of bankers, and I think that sets us apart. The gentleman this morning talked about, he said, I deal with a money center bank, but when I really have issues, I go to my regional bank. And because they know me, they can talk to me. I'm not going to a call center. And so that is really, really important. And those are really important points. I'd also like to say that as a regional bank or as a bank that's not a money center bank, you can't be too small. Okay. And I go back in my own history. I mean, just recently, there's a bank in New York. I think it has assets of $10 billion, fairly small these days. And they've done, I can't count the number of financing Boeing aircraft to throughout the world. Okay. And that's a $10 billion bank. A former bank that I was with, I think at the time maybe had $5 billion of assets. And it maybe 25% of its revenue came from international, and it had maybe 14, 15 overseas offices. So you don't have to be big to be active in international. I think it's really important for all banks to continue to diversify what they're doing. You start out doing payments and letters of credit and collections and foreign exchange, but then you have to move up. You have to move up scale a little bit if you're going to really serve your client base. And doing the financing that we heard from EXIM or SBA or on your own balance sheet with your own risk, that's really important. And then finally, I would say that you have to keep the executive suite of your banks involved. There's so much headline risk out there. I mean, we all receive phone calls the day after Russia invaded Ukraine. We had phone calls. What the hell's going on? What do we have exposed? And I think you have to stay ahead of that with your executives. You have to let them know how important that international is to the overall bank. And a lot of people say, oh, we can't have too much international risk, but I would say the opposite. International is diversification, and we need to diversify risk. And what is the right amount? Is it 10%? Is it 15% of your assets? Shouldn't be in the United States. It should be elsewhere. So,
absolutely. Thanks so much, Bill. And I think you have a very good point, because it's a couple of things. One, for example, our motto in Mexico is Banorte, the strong bank of Mexico, no? Because as I was saying, among the G6 or the 6 banks that hold 75%, we're the only one managed by Mexicans. But at the end of the day, you're completely right. When you take into account that between imports and exports, they represent close to 75% of the Mexican GDP. There is no way that we couldn't. We have to be present in international markets, no, and the same happens to other banks. So, and for that is why I believe a conference like this makes a lot of sense for a bank like us and some other banks here. this building the know-how, building the technology, the network and the relationships is critical to be able to support our clients, because at the end of the day, we're talking about knowing our clients. And if our clients are participating in international activities, what we have to do is be able to support them, and we're not going to be able to participate in every single international banking business line. There are some business lines that are for some people, and there are some other business lines that are not. But we need to enable and support our clients to do business abroad, to be able to transfer funds across the border or to the regions where they are making business, to facilitate trade, no? And it's, in many cases, it's a matter of being close to the clients, but it's also a matter of they were talking about it a while ago, of national security. They were talking about near shoring. Well, I'm talking about U.S. Agricultural exports into Mexico. 80% of our wheat is coming from the States. So we need to find a way in which we can finance wheat imports into Mexico or from the States, or we have an issue in terms of food security. No, so it's something that our clients appreciate a lot. No, now in terms of building those relationships or making teams, we were talking about government programs, ECAs, and we haven't talked a lot about it, but also multilateral agency programs. No, how can or what would you suggest in terms of building these partnerships between local regional banks and regional banks abroad, that may be the ideal couple for dancing with clients that have activities abroad, support by U.S. government agencies, leveraging also on the know-how and the network of companies like Cargill that have they participate actively in import export, but you also have some of the markets, you know it better than international banks or local banks. How would you suggest, or what can you share about partnering between all these players to serve the clients better? I don't know if you want to say.
Sure. So I would say the quickest way to get an RMA exchanged with a new bank you're trying to get to know in Latin America, say, is to get a live GSM 102 deal on your table, right?
Why are you looking at me?
So if that's one of the goals, and I think it's a great goal to for yourselves, then it's mutually beneficial to the banks that we work with on the origination side under CCC. They're looking to expand their banking relationships. A lot of the money center banks have pulled out of that area. Even if they haven't, it's a slow process to get those relationships up and running, get RMAs exchanged, and it's not good.
And I was going to say, we heard this morning about BAFT regional conferences you mentioned this morning, which I think is really good. I mean, we do have challenges as regional banks, and RMAs are a tremendous challenge, really. And corridors are being, corridors from money center banks to money center banks that leave out us and then leave out our customers in ways. And I think if we can use this forum and forums like this with banks in other regions of the world to solve this problem, it's a big problem.
Absolutely.
I'll just add, we as Cargill, I feel like that's part of the value proposition we bring to the relationship with the regional banks is we have those correspondent banking relationships that we partner with, throughout the world. We have expertise with the programs and how the process works. And what I like to think we bring then is a baseline of business that you can help grow your international business off of. So Cargill might not be your traditional regional bank partner, but you are important to us, and we need your support. And I like to think that there's a value added to yourselves if you work with Cargill. We can bring that expertise. We can bring a diverse pool of assets based on what your risk tolerance is, and help you kind of build a base level to grow those international.
Absolutely.
So,
Rita?
I would say that if you're participating U.S. bank in our program, we're happy to make introductions to these financial institutions. We have about 115, throughout the world, and we can introduce you to them. Of course, it's up to you, since it's a commercial sale, to undertake your conversations. But we're there. We view this ourselves as a resource. I mean, our singular mission is to increase U.S. ag exports. And I think I said in my bio, our group is passionate about that. So if we can, if we can help facilitate that by making those introductions, we're happy to do so. We're always, of course, available for conversations. You're thinking about, you have a client or you a particular commodity that you're interested in pursuing in a particular market. We have our folks here who can talk to you about their view of the situation on the ground. I mean, we have, as you know, the Foreign Agricultural Service has agriculture attaché offices throughout the world. So we have a lot of on the ground information that we can also make available. And that, of course, is also public. So, we think we have from our standpoint, Cargill is very good at making those introductions, extremely knowledgeable about the program. They're really good about taking you through, through a GSM 102 transaction. And then, we are also here then to make those kinds of introductions on your behalf.
I should say that the list of GSM 102 agricultural products is really, really broad, from raw materials to finished goods. It does not include marijuana.
Or fertilizer.
Not yet.
But you would be surprised. Wine and beer, not soft drinks, all kinds of grocery items, fruits, vegetables. What else, Miguel? Am I missing anything? I mean, of course, the standard timber, wood, certain types of paper.
Orange juice.
Orange juice. Yeah. And so if there was ever a question about a particular commodity and you're from looking at our website, you can contact us and we can give you clarification on what's eligible.
Absolutely. And maybe, I don't know, taking the opportunity, if you could briefly explain a little bit of the facility guarantee program, because with what we have been saying about the CapEx needs that are going to happen in the region, I believe there is a big opportunity there for CapEx needs regarding agricultural and food and beverage.
Thank you. Thank you for bringing that up. So we offer, both of our products are letter of credit based products, and we've been discussing this GSM 102 short-term trade finance program. The term is up to 18 months, and I mentioned 98% guarantee by the federal government, with 2% risk being assumed by the holder of the payment guarantee. Facility guarantee program is also designed to expand U.S. agricultural exports, but it does it by offering a guarantee for goods, U.S. goods and services to improve a facility in an overseas market that can demonstrate that it will potentially expand U.S. ag exports into that market. So, for example, and this does not, it can be large. I don't know, a warehouse, or even larger. I suppose it's kind of scary to me to think of dredging a port, because we're not experts in that area, but conceivably, right? But it could also mean improving a piece of equipment, buying a piece of equipment that's going to, I don't know, improve the processing of soybean oil, buying a piece of equipment that might, a conveyor belt, and instead of being able to, to transfer 10 bushels, now you can do 20 bushels with that. And so the guarantee for that can be, this program offers extended terms of up to 10 years, depending, of course, on the nature of what we're talking about. I mean, a piece of equipment is probably not going to last 10 years, so we would not furnish 10-year terms. But we see this as a big growth opportunity. And some of the people here were talking about earlier about the need for capital expenditure investment. And we think this offers quite a bit of opportunity. Happy to talk to you about, if you have a particular idea within your own organization.
Rita, I have a question on that. So if a company in Mexico that was going to import U.S. agricultural goods built a warehouse in Mexico for those U.S. goods, does the warehouse parts have to come from the U.S. or could it be locally sourced in Mexico?
So if you can, it is not an ironclad requirement that it all be U.S. content. If it makes sense, if there's a reason why you cannot, why it is better, say, to use equipment or parts, perhaps from another country or from Mexico, as opposed to the U.S. made product, then you make a case to us, and we can still consider supporting that particular transaction.
So I don't know if there's any question from the audience. We're pretty close to finish. No. Perfect. Well, yes, please, Rita.
So to the regional banks that are not a part, this my pitch to you, that are not a part of the program right now, but have an international, department or are thinking about one, it is not difficult to join our program. We look at your financials, recent financials. It is very easy to add your program. We check, we make a call to the regulator, make sure that you are who you say you are. And it is very easy from the application side to participate in terms of accepting a payment guarantee. We provide guidance in terms of training materials, and then we also take you through the process. So I wanted to assure you, and maybe, I don't know, maybe Bill, you can talk to the experience of whoever handled this in your organization. We understand that it's difficult at first to do this, but once you get used to it, I think most of the people have told us they find the process to be a relatively smooth one. So thank you.
All right, I think we finished our time. So thank you very much, Bill, Rita, Gabe. Thank you very much.